Bitcoin has been making headlines with astronomical gains and astronomical crashes, going from a few cents in 2009 to recently an all-time high of $60,000. Does this mean it's too late for you? In this video, we're going to cover what Bitcoin is, how it works, and then why you should invest. First, let's go over what Bitcoin is. Bitcoin is the world's first cryptocurrency. Think of it as digital money. The biggest difference between Bitcoin versus the dollar is that Bitcoin is decentralized, meaning it's not controlled by any government or entity. First, there's Bitcoin the system, and then Bitcoin the currency. The Bitcoin system is on computers scattered throughout the world. Since Bitcoin is decentralized and not controlled by any kind of entity, your next question might be, when did it start and then who created it? Well, Bitcoin was actually born out of the ashes of the great financial crisis in 2008. It was created by a person or a group of people named Satoshi Nakamoto. To this day, we still don't know the true identity of Satoshi Nakamoto. The big revelation with Bitcoin at the time was that you can send or receive money to anybody in the world without any kind of middleman or bank. Well, since there's no bank or middleman, then how does it all work? In the next section, we're going to cover how it works and then what the Bitcoin blockchain is. So the Bitcoin system is actually called the Bitcoin blockchain. The blockchain is just a series of blocks linked together. Think of each block as a digital notebook that keeps track of who sends and receives the Bitcoin. The way it works is that new blocks are only added to the blockchain as they fill up and then get confirmed. And then things can only be added to the blockchain and not removed. And now what you've all been waiting for, and the most important part, is since Bitcoin is decentralized, the way these transactions are confirmed is through Bitcoin miners. Miners are just really powerful computers that are doing computations to confirm who's sending and receiving Bitcoin by solving a really difficult cryptographic puzzle. The puzzle is made up of four things: the time, the proposed transactions, the identity of the previous block number, and then a random number. In the end, multiple miners on the Bitcoin blockchain end up confirming the same transactions, and then that's how those transactions are actually verified and then put onto the Bitcoin blockchain. Now you might be wondering, why would people want to build strong computers to mine Bitcoin? Well, the reason is, once the miners confirm these cryptographic puzzles and then solve the transactions, they actually get paid out in Bitcoin. When Bitcoin started in 2009, it was actually pretty easy to mine Bitcoin, and you can probably use any regular laptop to mine Bitcoin. However, over time, the difficulty of solving these cryptographic puzzles just got harder and harder, and now you need tens of thousands of dollars and a lot of electricity to mine Bitcoin. So we just went over what Bitcoin is, why it started, and then how it works. Now let's go over what the benefits of Bitcoin are. If you live in the US or a country with stable banking, then Bitcoin might seem completely pointless. You can send money through Venmo, Cash App, Zelle, so why does it even matter? Well, for people who live in countries with broken and corrupt banking systems, they can side-skirt and escape these systems. For example, in 2018, banks shut down for 4 days in Argentina, and then people couldn't withdraw or deposit any kind of money. With Bitcoin, you can completely avoid these banking systems, and you can send money from the decentralized Bitcoin blockchain. Another scenario to consider is living in countries with hyperinflation, where the prices of things are fluctuating left and right every single day. So for those people, it might be a better alternative to convert from their local currency to Bitcoin. Now that you know some potential benefits of Bitcoin and some use cases, how do people actually get Bitcoin? With Bitcoin mining being really competitive, how do normal people actually acquire it? The two ways that I've done it is through first Coinbase. You can sign up through my link down below and get $10 of free Bitcoin. For me, that was where I got my first Bitcoin years ago. And more recently, I actually switched to a platform called BlockBuy. With BlockBuy, you can buy Bitcoin and sell Bitcoin there. If you use my link down below, you can get up to $250 in free Bitcoin and get 5% APY on your Bitcoin every single year. All right, now let's switch to how Bitcoin's performing right now. Okay, so here I am at coinmarketcap.com on the Bitcoin page. Right now, Bitcoin is trading at $32,966, and it's down around 2% for the day. And the current market cap of Bitcoin is $617 billion, with a circulating supply of 18.7 million Bitcoin. Bitcoin is actually capped at 21 million Bitcoin, so that means there are less than 3 million Bitcoin left to be mined. All right, now let's quickly go over a quick chart history of Bitcoin's price. So this chart actually only goes back to 2013, but the price around here is in the low 100s, and then a slow rise to around a couple $100, and then the meteoric rise in 2017 and 2018, where the cap was around $20,000 before a slow descent down during the bear market. And then the absolute low of the bear market was around the low 3,000s, and then a slow and steady rise to around 12,000, and then there was a recent COVID crash within March, where it bottomed out around the low 3,000s. And then as of recently, the all-time high within April was around $63,000. And as of today, the price is $32,000 just a few months later. So you saw Bitcoin's price change throughout its history from the low 100s all the way up to $20,000 and then a recent all-time high of more than $60,000. Even with a recent crash down to $32,000, the price is still really expensive. So why is it so expensive? The million or billion dollar question is, how can Bitcoin be so expensive? Right now, Bitcoin as an investment is seen as a digital gold and a store of value. Since Bitcoin is being compared to gold and it's viewed as digital gold, let's compare Bitcoin to gold. First, gold is scarce, it's physically difficult to mine, and then it's highly desirable. Similar to gold, Bitcoin is very scarce, it has to be digitally mined, and then it's very now highly desirable. With gold, there's only a finite amount of gold within the earth that can be mined. Similar to gold, Bitcoin has a limited amount. There's only ever going to be 21 million Bitcoin that can ever be mined. As far as mining goes, with gold you need significant capital investment for equipment and then the permits to mine the gold. With Bitcoin, it's the same thing except it's in the digital world. You need significant investment for computer parts and then significant investment for electricity to do the actual mining. So in that regard, both are very difficult to mine and need significant amount of money to do the mining. Over time, as more people learn about Bitcoin, it's being more and more desired by people, big companies, and now major institutions. Another reason why Bitcoin is so expensive is that Bitcoin has brand name recognition. Now Bitcoin is so popular that even probably your parents know what Bitcoin is. So we've now gone over what Bitcoin is, how it works, why it started, what the benefits are, and then why it's so expensive. So now we're going to go over why you should consider investing in it. The first reason why you should consider investing in Bitcoin is since its inception in 2009, it's literally one of the best performing investments of all time. Since 2014, it's beaten the S&P 500 and even the more popular FANG stocks such as Facebook, Amazon, Apple, Netflix, and Google by more than 5 times. The next reason why you want to consider investing in Bitcoin is it'll help you diversify your portfolio if you're only invested in, say, index funds, stocks, or even real estate. And the last reason why you should consider investing in Bitcoin is that Bitcoin is getting more and more rare every 4 years. So every 4 years there's an event called the Bitcoin halving, meaning every 4 years, once the miners do transactions, they actually get rewarded half of what they previously were getting. So that means that the rate of Bitcoin that's being distributed from miners and being circulated into supply is getting lower with every single year. And since Bitcoin is still less than 20 years old, there's still going to be institutions jumping in. And as of right now, there isn't even a Bitcoin ETF available in the US. So you're still early. I know it seems late because Bitcoin went up to 60K and 30K, but you're actually still early because more and more companies and more institutions are likely going to be adding Bitcoin to their balance sheets. With Bitcoin being so volatile, if you're interested in seeing a video on how I invest in Bitcoin in a stress-free way, or you want to learn the difference between Bitcoin and Ethereum, subscribe so you don't miss out on those videos. Let me know if you have any questions down below. Thanks for watching. I'll see you guys next week.